we had a volume imbalance, and for our CB, price rejects this volume imbalance, fills it from the 4-hour CB, and then look at the rejection there. This is 4-hour chart. Once you see that, then you can drop to 15 minutes, or let's say 1 hour. If you look closer in the 1-hour chart, we have that was the buy side that was taken there. Then we still have that volume balance, which is in close proximity with the CB, or this bearish big imbalance. Then if you look closer here, after this high was taken into a key level for our CB, price came down lower with some energy. This is a swing low. Price closed below that, and it left an imbalance there. That alone is the 2022 model. The 2022 model is all about manipulation to a key level, an impulsive move away, causing market structure shift after closing below this short-term low. Then it leaves an imbalance, which can now be our entry. This alone can be an entry there, or this one during the New York Open, and then you can let the price rally lower to take out this sell side liquidity down here. But this I don't get in through this one, but rather I dropped lower into a 1 minute. This is where the 2022 model is very clear. Yeah, so you look at this. This is a bit now clean. That is still the 1 hour FVG. That's our key level. And then price came and took out this high. See, now things are getting even more clearer than the higher time frame there. So we have buy side liquidity there. Price comes back with a lot of energy after taking all these relative equal highs, and then closes below this short-term low here. That is a market structure shift, MSS. Then when price closes below here, now we check on this expansion leg if there is an FVG at this time frame. If it was 3 minutes, 4 minutes, as we zoom in to lower time frame for me to see if I can get an FVG on that area. So we have buy side taken into a key level, impulsive move away causing market structure shift, this point here, and price comes back to what? To an FVG. So that now will be your entry. What time is it? This is the 9:50 to 10:10 macro, which is very, very okay. So that should be a nice entry. So your first target can be at this level here, and that's a lot. Now the question comes in: what about these bullish FVGs here? From 4 hour to 1 hour to 1 minute, we've analyzed the charts, and we've realized that the market is no longer poised to go higher. So what is here? See all these bullish FVGs. Remember, sometimes I gave you that quick idea that when we are bearish, we anticipate the bullish PDRAs to fail. So like this one, you don't expect it to hold price higher, but if you look at this one, very energetic move below it, and look closer what is here. So we have an inversion now, and inside the inversion we have a fair value gap. So you see, if all this movement up and down here, there was nobody close above the IFVG, and now this FVG here actually supported price lower. You see, price is just rejecting from the 50% of the consequent encroachment. Then from there, we rallied lower. What do you have here again? Another inversion there. So price comes down, goes up again, then again dumps lower. Look at after it closes again it once more. Look at the position there, very nice. And we also have another inversion here. So when these PDRs are overlapping like this in the direction of the time frame, it's something to appreciate. So then at last price gets in back once more, then drops lower, taking out this sell side liquidity. From here to here, those are enough pips which can be very useful. So it's all about marking your key levels, waiting for price to react from that key level, and then now you can zoom into lower time frame. You can check out on the tick every box and see whether it is adding up. Buy side taken, tick. Market structure shift, the downside, an energetic move, tick. The value gap in the expansion leg, tick. And from there is an entry, and then now stop loss can be above this swing high, anticipating that it's not going to be violated, and then price really played so well of this PDRA. So these the PDRAs are strong. You only need to know what side of the market you are, and then lean on to higher time frame buyers always. So somebody was buying from me, got wrecked. Somebody was buying from me again, got wrecked. And that is part of the business. We'll all go through that until we understand what their time frame sentiment is. So that was a simple, clean, clear, precise review of the US100 trade that I shared last week. The major point is 1, liquidity sweep or purge. 2, market structure shift. Number 3, fair value gap. And that's it. From there you work with the higher time frame buyers as you watch price deliver. Some retracements like this one can be scary, but just trust your higher time frame buyers.